Hello, everybody. Hope everybody's having a great day. It is 1:57 p.m. I'm going live a few minutes early today. I'm going to try to make this a little bit brief today, maybe 30 to 45 minutes. I got a few things I need to get done this afternoon. It's supposed to start raining and possibly storming around 5 or 6 o'clock, and I want to get a few things done before that happens. So let me get you guys brought up on my phone as normal. So I can see your comments. Says there's one person in here already. So I can see your comments. Okay. So I'll wait a minute or so and see if we get a couple people joining us. Obviously, I've got ES up here on the screen. And ever since the Gilead news has come out, obviously we've been selling off, which was likely to happen anyway, and we will discuss that. Now it says we have two of you in here, so whoever's in here, hello. And I guess I can just go ahead and get started because these are recorded. So anybody who joins us late, they're really not going to miss anything. They can see it when they watch the recording. So let's talk about starting yesterday, right? We were kind of in the process of this slow curve, right? I think we were somewhere around in here. Yep. I think it was about 123, if I remember right, when I posted in the room, and that would have been right here. So we were right in here, and I said it looked like we were trying to complete a slow curve, and obviously we did. And I also said once we completed the slow curve, it's highly likely that we pull back, which we did, as you can see. I said that normally you get one of two types of pullbacks. Once you complete a slow curve, you either get a violent pullback where you're going to come down clear down here. The more likely thing is exactly what happened. We form a cup and handle pattern, which was right here. Okay, see that? Now what normally happens is once you complete that cup and handle, you break to the upside, and I would have expected, so right here, I would have expected that we possibly would have broke up here. Now we did have the 200, we did have the trend line, and then up here, you can see it would have made sense for us to catch some resistance. Okay, so what I was anticipating, everything worked out correct up until right here, and we got another bounce down, and we formed what's called a J hook pattern. You see this? Why is it called that? Because it looks just like a J. Typically, a J hook pattern happens right off of the 20 SMA. You see this here? Okay, now I was expecting that when we came up here, here's your cup and handle. You got your slow curve, which is the cup. Here is your handle. Right? I would have expected, but I do see that we had several obstacles here, that we would have continued up to here and then bounced back down. But what we did is we came up here and then we formed a J hook right up here to this level. Okay, and why do we expect it to leave right here? Look at the way it left before. Okay, you see that? So that's why I would have expected a pullback right here, and we got it. Okay, it's just that I expected it to happen once we formed the cup and handle. It didn't happen until we formed the J hook here, came up, and now we've sold away. Obviously, this candle is where the Gilead news came out. But what do we always say, right? News is only temporary. Price is going to go in the direction it was supposed to go in anyway. It's either going to accelerate it getting there, or it's only going to temporarily go the opposite direction, and then it's going to revert back to where it was supposed to go. So in my opinion, all this did was accelerate us down to where we were going to go anyway. So as you can see, we came right down here, which was this little pivot, but then this sharp move to the upside. So right here or right here would have made sense for a relief bounce. And we got it right on the first, right? Right on the first one here, this little pivot and then up. That's where price got to. Let me close in on it, make it easier for you. Okay, that's where price got to right here. Then it got a relief bounce, okay, which we expected. And then after the relief bounce, now here's where it gets funny. So I've got some friends on Twitter who also run rooms, and some of them, let's just say, I like them as people, but they're just not very good at trading. And I say that because they frequently lead their followers the wrong way. So the other day in our free chat room, I kind of posted a little bit about the one guy who that was on SPY. So a couple days ago, I was telling you guys, right, that I expected SPY and ES to drop at that time. Well, he was like telling everybody, I'm buying 283 calls going into close on SPY. These things are going to be huge. I expect it to go up to 285. Okay, so he bought the calls, and then what happened? Price dropped overnight. So then the next morning, he's like, everybody out there, they're saying it's going down. I'm loading up. I'm buying more. I'm long on the open of SPY. Okay, what happened when it opened? Started going down again, right? Then he was like, I'm adding SPY long. Everybody else is wrong. And then after he said that, it like flushed. Well, the problem with that is obviously his followers, and he has a lot of them. I mean, I know this guy. He's got, well, I don't know what he has these days. At one time, he had 300 or 400 people in his paid room, 300 or 400. He makes a lot of bold, claims, and he's all about, trying to hit the home runs because it's flashy, right? And he does occasionally hit them. But more often than not, and he just wipes it away, he's totally wrong, like he was with SPY the other day. And the only reason I bring that up is on this move right here. Well, let me finish the story. Okay, so it flushed after he said he added. So he said he bought it 283 calls, expecting it to go to 285. Then the next day, it opened lower, it gapped down because it went down overnight. He said he was long again, meaning I'm going to buy more here. Then it dropped more, and he said, I'm adding long here. Then it flushed. Well, when it flushed, he very quickly admitted, hey, I'm wrong. I just took a big loss. No big deal. I'm now short. And he said, I'm short down to 270. Nah. Did we get anywhere close to 270? No, we didn't, right? In fact, we haven't been anywhere close to it. So then, after he said he was short down to 270, the very next day, which was yesterday, he was long again. I'm long again. So now that brings us to today. And he's all about, he's long. It's going back up. And I think he's, don't hold me to this, but I think he's even been throwing out numbers like 289 on SPY, which obviously on ES, just take this number off. So basically, he's saying we're going to go way up, right? So this morning, we were going up. This morning. And then we get up here to this 2831 level. And then we sell off. Then we make this little thing. And then right here was where the Gilead news came out. And you see it went down. And he immediately started saying, ah, suckers, everybody thinks this is going down. I'm still long. I'm buying the dip. I'm buying the dip. This is going back up. All right, so here's the relief bounce. And he said, I'm going long right here. And look what's happened since then. All right, so when you're guessing, that's my point. When you're guessing, when you're not really looking at price action and knowing what's likely to occur, and you're just guessing, and this guy has his own strategy, and I'm not going to go into it, this is what happens. So he's been wrong, other than this move right here, he's been wrong basically the entire week. And the people who follow him are just like, oh, you know, I'm adding. If he's adding, I'm adding. And there's other people like going on his feed, and they're like, you guys are nuts. Why do you think that this is going up right now? You guys are nuts. They're like telling these, they're just blindly, nope, you know, I'm with him. I'm with him. Well, you can see what's happening. He's been wrong all week except right here. This is the only move he's been right about, and I have no idea like what he's in now. I know he's long, but that's another thing. He frequently does not tell people exactly what he's in. Right? He'll just say, I'm long. Now, the other day, he did say 283 calls into close, and I expect it to go to 285. That day he did. And then he was also saying when it went down the other day, he was saying, I expect it to go to 270. He's talking about SPY. Never did. So anyway, here's where we're at. Here was the news. This is completely expected. I expected up here to see resistance based on what we have over here. In fact, let me just make it smaller. Okay, what we had right there, that strong drop away, and we haven't been back up there yet, right? Let me squeeze it in so you can see it. This is our first time to get back up there since it moved away that strong. So I expected once we got up here to 28.31 that we would see a pullback. And we have. And right after we started pulling back, we got the news which just accelerated it. Now, without the news, I'm just saying I probably would have said we were going to pull back at least to right here. And you guys know why, right? You've been around long enough. Rally, base, rally, okay? That would be a natural point for it to pause, or maybe even get a little bit of a bounce up this way, maybe just put some structure in and then go lower. Okay, but because of the news, we just blasted right through that, and we got down here to this pivot where we had the bigger move back up. That's where it caught its support. But now it's starting to drift back down. So where are our obstacles? Here, in here, right? If we take this out, that's going to more than likely get us under here. Let me squeeze it in a little bit. So then where's our next obstacles? Here, right? This pivot here. That would be our next. Then here, this little basing area, a little drop, base, rally away. And then finally, 27.71. Okay, as you can see, price is trying to get this wick right now. Right as we're talking, it's trying to get below this wick. We'll see if it has enough strength. You guys know we got what we call clear and hold. Clear and hold. So we're clearing it right now, but now it's got to hold it. It needs to get into, when price started heading back up this way, anybody who went long, they're going to put their stops down in here, right? So we've got to get price into those stops, and that's what accelerates you down. So when we cleared this wick, which just happened, it bounced us down to the bottom of this wick. Now we just barely poked our head below, but you can see right now it's catching some support right here. We need to get below here, get into some stops, and that will send us lower. Then that'll get us down into here. All right, we'll watch it for a second. And then we'll look at some other things. I want to talk a little bit. I know Kelsey is usually working. but I do want to cover kind of that dialogue that her and I have had going back and forth. Talk a little bit more about what you can do when you have a limited amount of capital to work with. All right, we're still not getting below here. So let's just put an alert below here. So if we take this out, then we know we're continuing lower. All right, and then I'll put one above in case it totally reverses. And we can talk about some other things. Like I said, I want to keep this a little bit more brief today. Okay, there we go. All right, so AMD. AMD was on our watch list because it was a daily inside candle. So why don't we start there? Let's just start with why it was on the watch list. All right. Okay, so it was on the watch list. You guys are going to have to excuse me. My Thinkorswim has been horrible today. I mean, absolutely horrible. Like, it's just not working. It has been crazy, funky, out of whack. Like, sometimes it's not even showing. Like, I'll type in the symbol will be correct, and it's showing me like something totally different. That happened to me earlier today. All right, here we go. So here was our inside candle. We gapped up, and obviously Kelsey went long on the gap up. Now, let's look at a couple of things. All right, she was asking me, is this not a trade that I would have probably taken? No. Okay, and why? Okay, she didn't do anything wrong. She just wasn't looking at some of these factors. Okay, where did we open? Okay, we opened right here, which was what? Right below resistance. Right below resistance. What do we know likely happens the closer you open to resistance? Right? It usually goes up, maybe even pokes its head through, but goes up and it typically bounces back down. Hey, Cathal. Good to see you, buddy. Typically bounces back down, right? And that's exactly what happened, but that's just one thing, okay? What are some of the other things? Whoops, I'm sorry. It was over here, okay? Opened up, and here we go. We poked our head up. Then, right here's where we took it out. Then it started to reverse and come back, okay? Then it caught a little bit, right? Then we come over here, we poke up again, not even quite up to where the top of the daily candle was, and then we just started to sell off. So where you would have been entering, right, was right here, okay? Right there, and that was 57.76. So for me, about 57.80. We got as high as 58.63. Okay, so about 80 cents, 83 cents. Okay, now that's not dramatic, but if your entry was where it was supposed to be, you were definitely profitable at one time. Okay, if your entry was late, then you might not have been profitable. So once it moves up here, right? Once it moves up here, you very quickly should be getting your stop somewhere to where you're either break even or even slightly into profitability. And when I say slightly, I'm basically saying above, just barely above break even. That way, if this happens, okay, and ES is actually going the other way right now. I just had an alert go off. We'll go back to it in a minute. If that happens, you get stopped out quickly and you either make a couple of bucks or you just lose a couple of dollars. No damage. No damage. All right. Well, I have no idea right now where her stop was, but let's say her stop was like down here at the bottom of this body, right? If you don't move your stop when this goes 80 some cents into profitability, if you don't move your stop and you're playing options, which I'm almost positive she does, and it comes all the way back down here, you're going to lose money. I mean, it's just, you're going to lose money. That's the way options work. So I know you would have been profitable up in here, Okay, so let's just say your stop was there. I'm talking to people in general. Okay, once you start getting up in here, I would definitely move it up to the top of where you entered at a bare minimum. Okay, now somebody may say, yeah, what if it gets volatile and starts bouncing? So what? Okay, again, wouldn't you rather either make a couple of bucks or lose a couple of bucks than have it come back here and lose whatever you lost? Because I'm telling you, if it came all the way back down here from here and you're playing options, you're going to lose quite a bit of money. Okay, that may look like a tight stop, but the way options work, and those of you who play options a lot, you know what I'm talking about. Once you get that initial spike, if it starts to fade back down on you, you're going to lose that premium in a hurry. All right, so again, let's look at this. So we were moving up, right? We gapped down to start the day in here. This is the inside candle we're playing off of. It came up, we did take the top out. It then from here to here was an 83-cent move, okay, from where I would have got in, 83 cents, because I'm always 4 or 5 cents above the top of this candle. But from where I would have entered, this was an 83-cent move up, okay. If your stop, let's just say, was right here at the bottom of this body, you should have been moving it up at least to where you entered, if not slightly above, to protect yourself. Okay, then it came back down through, okay, would have stopped you out. Okay, even if it was down here, yes, you would have lost money, you get stopped out. And then what happens? It pokes up, but it really never, see this? It really never gets back up above here, and then it starts to fade. So as it comes back down through, what do we have here? What do we know about price action? Where was the good trade here? This is a reversal, right? Textbook reversal. Inside candle, taken out to one side, price comes back into the range, and if it forms what? A shooting star, or if it's the other direction, a hammer, then you're looking to enter the bottom of this, and then you find your price target. For me, my price target would have been right here, the bottom of this candle, which would have been slightly before 53.27. Okay, that is a textbook reversal. Hey, Sonny, good to see you, bud. In fact, let's do this. Let me go to our lessons. And let's go up here, because that's what we're trying to do here. We're trying to teach. We're trying to teach. So let's find. Let me find it. Give me 1 second, guys. Here it is. Okay, reversals. Let's just read it. Okay, price action reversals are typically formed when an inside candle is countered by a hammer or shooting star. I'm going to flip back and forth. Inside candle countered by a hammer or a shooting star. Okay, right here's our shooting star countering our inside candle. Let's go back. In a bull, okay, let's go to bearish because that's what we want here. Well, actually, it's just going to be the reverse of this. So in a bullish pattern, you'll take out the bottom side of the inside candle first, push lower, then reverse, creating a hammer without taking out the highs of the inside candle. Oh, here it is. I'm sorry. Here's the bearish. In a bearish reversal pattern, that's what we had on AMD. Okay, price pattern will take out the top side of the inside candle, push higher, then reverse, creating a shooting star without taking the lows of the inside candle out. This is a bearish scenario. This reversal pattern gives the trader two opportunities to profit. The first is on the initial move to the top side, right? When you take out the top of the inside candle. And the second is when price goes below the shooting star that was just formed. Okay, so we just read it straight from the notes. And let's get even closer here. Okay, straight from the notes. Here's the inside candle. We took out the top side. and then price reversed, came back in, formed a shooting star without taking the bottom of the inside candle out, you enter right below here, and then you have to pick out a take profit target. For me, it would have been right there, the bottom of this candle. Okay, because I don't want to get into the wick, and I don't really want to get down here and have it bounce off of the support level. So that would have been my profit target. Let's just see what that would have been. Low was 55.85. So I would have entered at about 55.80, and the bottom of this was 57.73. So let's just even say 53.80. There's $2, right? 55.80, 53.80, $2 move, boom. Profit, easy, you're conservative, you're out, you don't have anything go against you, okay? That's how I would have played it. Oh my gosh, here I am. I'm totally looking at the daily chart. Why didn't somebody catch me? Right here, we're on the daily chart. We're on the daily chart. And here I am. Well, I'm giving you the scenario. All right, so if this was the 30-minute or the hourly, that's how you would have played it. Nobody caught me that I was on the daily chart. Now let's go back to the 30-minute. I apologize, guys. I apologize. Let's get back over here. All right, so here we were. Okay, we went up. Okay, we entered. We were above, right? Above the daily candle. We went right up to resistance. Remember how I said that it was opening us up here near resistance. Okay, see the gap? Here's support. Here's resistance. And then it came back down. Then we formed a 30-minute inside. We tried to go up again, right off of resistance and back down. Yeah. Yeah, it was a textbook example, just on the wrong time frame. That's all. But and then we came back up again to resistance, back down, right? We pushed down, back up. We formed another inside candle. Then we went another inside candle. Okay, what do we know about inside? If we can break it, it's usually pretty powerful. Okay, so we broke to the downside first, and look what we did. Right? Big flush down, and then we push back up. All right. Would that have been a target? Absolutely, right? A 20 would be a target. So let's see, the break of the second inside candle. Let me find it, 56.74. So I would have been looking at an entry of like, say, 56.70, if that's a trade you're going to take. And then down here to the 20. 55, let's just say 55.90 to be conservative. 55.90 from, what did we say it was up here? 56.70. Okay, so not quite $1. Not quite $1. All right. So just not really getting a whole lot out of AMD today. Okay, and again, from the reasons I pointed out at the beginning of this analysis, it wasn't something that I was necessarily interested in. Just because it's on our watch list doesn't mean you have to trade it. Okay, right? Everybody's going to look at each name, and then they're going to do what? They're going to start figuring out the factors. Okay, what factors do I have that say a downside trade is good or bad, or an upside trade is good or bad? Okay, and then you start numbering those factors out. If you can get 3, 4, 5, the more you get that says, yes, this would be a good trade, then that is a good trade, and that's something you should have your alert set. You should be ready to go, okay? But still, as I was trying to tell Kelsey, and again, I'm trying to help Kelsey. I'm trying to help you, Kelsey. I know you're going to watch this. Be more conservative, okay? Don't be as aggressive with your price targets, and don't try to jump into so many trades unless you've went through and really analyzed them carefully, and you start adding these factors up, okay? Or factors not to go in. What are factors not to go in, okay? Where are they opening me up? They're going to open me right under resistance. Already a factor that I might not like, Okay, that might be enough for me right there. Okay, they're going to open me right under resistance. Okay, if we open down in here, right, then we always talk about this. Then we got room to move, got room to stretch our arms. Okay, maybe make some money. But the closer they open you up to some sort of resistance, or if they open you up right underneath of a moving average, like especially the 200, I get a little nervous because what happens right here? You come up to it and you can't get through, right? You come up to it and you can't get through. Remember, this is another red flag. What was the market doing this morning? Let's go back and look. I want to show you. What was the market doing? Okay, the market was ramping. So if the market is ramping and AMD is butting its head against a close resistance, that's a red flag, right? Because you would expect AMD to just follow it right on up if AMD has any strength, right? Okay, so I'm just trying to point out the things that would have concerned me. Let me get back to it. All right, so here we are, right? These first three candles, I just showed you what the first three candles on the market looked like. They were big green candles to the upside. But what did AMD do? It went up here, butted its head, and came back down. Couldn't get out. Inside candle, went up, butted its head again, came back down. And then after that, it's just sort of sold off, right? Back down to the 20. So for me, this would have been a red flag. If I see, again, and I know a lot of you, if you don't have multiple monitors, make sure that you have some way to see what the market's doing. But here's the first three candles on the market. That's strength to the upside, but you weren't getting it with AMD. Okay? All right, let's look at some other things here, and we're going to circle back. Regeneron, was that one of them? I think Regeneron. Come down here. Yes, it was. Okay. Yes, it was. And I might have to get a little bit closer. Still have my line. All right. I had this marked. Okay. This is one that I liked. Like, look where they opened it. Almost exactly in the middle. Excuse me, not open. Where we would enter on the break of the candle, almost exactly between support and resistance. So once we break, okay, I'm thinking, I look over here, hey, there's nothing there. I got nothing but open space if we break here, right? And what did it do? Boom, it broke, went all the way up, came over here, pulled back, went up higher, pulled back, went up higher. That's what you want to see. This was right off of our watch list. And from here, I put it in the room. I can't remember exactly what this was. What was it, like a $9 or $10 move, right? But this is what you want to see right here, okay? And right there, what this line signifies, this was my entry point above the daily inside candle. Okay, so I already had it drawn in. And then when you break there, what's the first thing you do? Look for obstacles, right? I don't see any. Okay, I don't see any recent obstacles I need to worry about. Okay, you could have had a T1 of this level, right? And then your T2, let's see if there was anything. Let me squeeze it in. Yep, T2 could have maybe been the top of this candle. Now, we didn't get there. Okay, that's why I'm usually out at a T1. I've told you before, I know a lot of people, they have a T1 and a T2. Some people even have a T3, and they're scaling on each one. I'm just more conservative. I mean, some people would call me ultra conservative. I would much rather take the sure thing, put that money aside, and start looking for another great trade. Okay, that's just me. All right, so that was Regeneron. Amazon. Let's go to Amazon. All right, I don't think. Yep, there it is. I did have it drawn in. Okay, so for Amazon, this black line was taking out the high of the daily inside candle. And this looks small, but that's 30 bucks, right? You got to remember how big Amazon can move. 30 bucks from here up to here. And I think I was being a little bit conservative with 30. Let me see. Because I remember the entry was 2404.04, I believe. Wait, no, I can see it right there. 2394.04. 2394.04. The top of this candle was 2424.18. So over or just under 30 bucks, something like that. Let's look here. 23.94. So there's $6 there. Yeah. So 30 bucks. 30 bucks. And even if you caught 20 of it, 24, 25, 26, 28, right? You didn't have to catch the whole thing. As soon as it starts coming back a few bucks, you're out. Maybe that's $28, maybe it's $26, $25 on one move. And I missed this in the morning. I apologize to you guys. When the market first opened, I had several alerts banging off all at once. And I somehow missed Amazon. I was looking at all these other ones, and then I came back a little bit later in the morning, and I'm like, oh, how did I miss Amazon? $30 pop right off the bat. Okay, that's what you're looking for. If you can afford the premiums, let's see what the premiums are. They're not going to be cheap. I can tell you that. Let's get down here. All right, 2,000 bucks. Okay, if you were going short, 2,400. Going long, 2,000 bucks per contract. So not everybody can play those, right? Not everybody can play those. So that was another one. What else? Beyond. Okay, Beyond was a great one. Let's get to the chart. And again, my Thinkorswim is just moving like molasses. Okay, so Beyond, I can tell you, give me 1 second. All I have to do is go back to my alerts and it'll tell me what it was. $90.43. So really right here at this line. Okay, that's 90.44, but 90.43. Okay, was our break above the daily inside candle, and look what it did. Boom. Went all the way up here. Okay, I would have been, I probably would have got out here myself, but really that didn't come back all that much, and then it continued higher, and then it sort of just based sideways, and then it got another pop. Here at the end of the day, it's getting a pop. All right, even though the market is weak, Beyond has been strong. Now, at this time, the market was strong, right? But now the market's weak and Beyond is still strong. So another very, very nice play from here just to up in here. 94. You know, this alone was like a $4 move. Okay, then if you took it all the way up here, 96, about a $6 move, approximately. Right, and then I guarantee you I wouldn't have held it through all this right here. I wouldn't have. Okay, CGC. Okay, I didn't add that to my winners, but like I was showing Kelsey, if you have a small account, and again, it's all relative, doesn't matter, you know, what you consider small. Okay, names like CGC are the kind of names that you want to trade because the premiums are cheap and it moves. I tell you this all the time. This is a high beta stock, so that means small moves are going to pay off. Let me get back. There we go. All right. So this was the break of the bottom of the inside candle. Okay, right here. This was the break. Now, it came down initially about 20 cents. So I watched this move. Just that 20 cents, depending on where you bought, gave you about 6 to 7 cents of profit. Doesn't sound like a whole lot, does it? But like as I showed Kelsey, it was a 37.5% gain from here to here. That little move, 37.5% on your money. Okay, then it did pop back up, but then it came back down again. And look, it went down to here. Let me see what this is. 82 to approximately 58. So what is that? Not quite 30 cents. So there's another one. There's another move. Hey, Dennis. Good to see you, buddy. We're not going to be on here much longer, Dennis, but I'm glad you're here. You'll be able to watch the recording. We'll probably be on another 5 or 10 minutes. But again, all I'm trying to show you, small account traders, just this, that looks so small. But these plays are out there. That was a 37.5% gain on your money. Let's go look and see where they are at currently. Okay. So at the money, 22 cents. At the money, 21 cents. $21 or $22 for at the money options on CGC. Okay, earlier at certain times, this was 16 cents. Okay, now the volatility, has kind of risen a little bit because of the action, right? So when I had seen it earlier, it was 16 cents, and then it went up to 22 cents over here. So you bought it here at 16 cents, and then it went up to 22 cents where you could sell it. 6-cent move. That's where your 37.5% comes from. But you can see it. Now, see, it just fell down to 18 cents. Now it's back up to 20. All right, so it's always fluctuating. That's why I was saying before, between 16 to 20 cents is kind of where it's been fluctuating today. If you're a small account trader, that's what you want. If that's your only trade today, okay, Kelsey, now I'm talking to you. If that's your only trade today and you're at, I think you said your account has 134 in it right now, and I gave you that example. If you only bought 4, right, only bought 4 puts, and at the time they were 16 cents, and then you were able to sell them at 22 cents and make 37.5%, that was a $30 profit, approximately, whatever it came out to be. Maybe it was 5. Yeah, it was 5 at 16 cents is $80. So 5, and it goes up 6 cents. So that's 5 times $6. You make $30 on 80. That's 37.5% on your money, and you're done. Okay? Now, instead of $134, you have $164. Then the next day, you look for a trade or two, okay, but just one at a time. And you don't have to be over aggressive, right? $80 wasn't your full 134. Okay? It was a little over half, right? Because I was trying to show you that you don't have to take that whole account and put it at risk. If you want to, that's up to you. If you blow it up, then you have to replenish, right? So you don't want to do that. But you see how quickly it'll start to compound. So then the next day, you would have 164 to work with. Right? Maybe you take 100 of that and put on a trade, but you're looking for these types of premiums, okay, where you can buy 3 or 4 or 5 contracts for less than $100, but then the other factors have to go with it. You got to know that it has the ability to make a move. Do we have an inside candle? Do we have a hammer after a strong move down? Are we looking for a reversal? Do we have a shooting star after a strong move up? Do we have an outside candle and we're about to take one of the sides out and try to expand the range? There's all different kinds of price action plays that you can look for, but then it has to be in conjunction with what is the market doing, right? Is the market with me or against me? Okay, where is my name at that I'm thinking about trading? Do I, it would be awesome if you had full higher time frame agreement. So, obviously if you're looking to go short, it would be a perfect scenario if you had the monthly red, the weekly red, the daily red, and then you're looking to go short. Okay, all of that adds up, and the more of those factors you can put in your favor, then you can get some trades, make some money, and then you just close it down for that day. And then the next day, now your account's a little bit bigger, right? So let's just say you did it again the next day, and maybe you make 40 bucks the next day. Well, if you made 40, now you have 204. So you went from 134 to 204 in 2 days. Okay, and then maybe you take 100 to 125 of that and you trade with it the following day, and so on and so forth. And you just keep doing it over and over again. If one goes against you, you want your stop to be small. Okay, maybe I lose 10 or 15 bucks if I get stopped out. You don't want to lose 50 or 60 if you only have 134 to work with. Or if you only have 80 in the trade, you don't want to lose 40 bucks. That's 50% of your investment in the trade. So hopefully, and this is for everybody, just this one particular part, I wanted to really try to walk Kelsey through it. But anybody out there, you have to think in those terms. Okay, no matter what size your account is, you may have a $2,000 account and think in your mind that's small. Okay, but you grow it the same exact way. Now you could afford to buy slightly higher premiums, right? So if you had a $2,000 account versus a $200 account, you could buy premiums that are a little bit higher. But it's always comes down to, is it a good trade or not? Are the probabilities in my favor or not? And again, let me reiterate this. Just because something's on the watch list doesn't mean that the direction it goes is the right trade. Okay, there's no way, I wish I could, guys. I wish I could, but there's no way for me to go through and take every single stock that has a daily inside candle or maybe a daily outside candle or some other setup that we like, and then go through and analyze every single thing about every single trade. I can't do it. It would take every waking moment that I have. That's why I always say I give you guys the watch list, pick a few names that you like, and then you analyze those few names based on the criteria that we teach. If I could do it, I would do it, but trust me, I don't sleep as it is. I'm lucky to get 4 or 5 hours of sleep a night. That's a good night for me. I mean, there's nights I don't get that much. So I just can't do that. But I'm trying to teach you how you do it, okay, or how I do it so you can do it on the names that you like. And you can quickly glance at charts, right? Whatever it is. Let me just come back here. Let's go back to ES. Okay, so ES came down, and again, you see it couldn't hold down here, and then it popped back up. Where did it pop back up to? Opening price level. How often does that happen, right? I'm being sarcastic, obviously. But if you see something that you like or don't like as you go through a chart, let's go to the daily. Give me a second here. All right, I got a bunch of stuff on mine that might make it hard for you to see, but okay, so here was the, I don't think this was inside, was it? Let me look. 27, 25. Yeah, this was an inside candle today on ES. I didn't even catch that. You guys need to catch that. Somebody needed to catch that. Hey, we're inside on ES. Okay, so we had an inside candle on ES. And we broke the top right here, 28.08, and we went as high as 28.36.75. But even if you just took it to this level, okay, 31 minus 8 is what, 23. Okay, just on the break of the inside daily candle on ES, that's $23 move right to there. Right to there. Or you could have got out if you wanted, if you felt safe. You get out right there on the trend line. Because it did stop there, remember? I'll show you. Let me show you. Right here. Remember that this morning? Because remember, I was kind of being sarcastic about that, oh, hey, where did we get resistance? Right at the trend line. The first time we got there, look at that, to the touch, and then it sold us back down. Then it came down here. They regained some strength. They came up. They broke through. Here was a break, retest, and go. So we had a lot of things that we typically look for, right? When we get back to this trend line, we would expect it this first time to act as some resistance. That was pretty decent resistance because it really sold all the way down to here. Okay, so from this touch, it sold all the way down to here. Buyers got their feet back under them. They got back up through. They broke through. They retested. Then they went. Okay, break, retest, and go. So from here, 28, let's just say 28.22 up to a high of 28.3675. Well, again, you could be conservative and say that was a $12 or $14 move on the break, retest, and go. Now, I probably would have been looking to get out here to be conservative. That would have only been a $9 or $10 move. Okay, but up here was a around a what did I just say? 20 or not 20? Excuse me, $12 whatever, $12 to $14 move. Yeah, up here. $12 to $14 move. Right here would have been about 9 to 10. Okay? Is it worth it based on the premiums? I haven't even looked at the premiums on ES today. Let's look. All right. So it'd be 2,300 divided by 2 because you only pay half of that. All right, 2,300 divided by 2. If you're going the other way, it'd be 2,150 divided by 2 because you only pay half of the premium on ES and you only get half the profit. All right, so then you'd have to decide, hey, I'm playing an 1,100 and some dollar per contract play. Is that worth it to me to get 10 bucks to 15 bucks, let's just say? Well, let's look. All right. All right, so a $10 move right there. That shows you what it's paying, right? You buy it here, you can sell it here. Yeah, about 500 bucks, which is what you should get, right? But we also know that with options, it depends on how quickly it moves or doesn't move. That's why you can't just say a $10 move on an option is going to pay you 500 bucks. It may be less than that, it may be more than that. Okay, but it's showing about 500 bucks for a $10 move. Just depends on how quickly it occurs. All right. Anybody have any questions? I know we did more teaching today than we've done anything else. But I think it's important because I want everybody, especially, again, I know most of you have smallish or smaller accounts. And again, that term is relative. And that's what we're here for. We're trying to help you grow those. We want everybody to have big accounts, but you got to start somewhere. Oh, and I was going to talk about that. So I know some people, they do it to practice discipline. I know some guys who are big money traders that every once in a while, maybe once or twice a year, and they're going to keep trading other accounts. Okay, I don't want you to think that that's all they're trading, but about once or twice a year, they'll take like $100, $200, $250, something like that. They'll just throw it in an account, and for 20 days, which is 1 month, right? Because there's only 5 trading days in a week. For 20 trading days, they'll see how big can I grow that 100 or that 200 bucks. And they do it for discipline because you have to be more disciplined when your account's smaller. You have to be. If you're less disciplined, you're just going to blow it up over and over and over again. And so these big money traders that I know that do this, they're not doing it like, trying to think here what the right word is, but they're not doing it for kicks. They're doing it to help their own discipline. These aren't guys that I'm talking about are out on Twitter, You know, hey, I just grew $200 into 20 grand. You know, it's not that kind of guy. They're not those kind of guys. They're not even posting on Twitter about it. They're doing it for their own good. So they'll take $100 or $200. They'll trade it for 20 days. They'll be extremely disciplined, and they'll see, okay, can I turn that $200 into 1,000? Can I turn it into 2,000? Can I turn it into 5,000? You know, whatever. And each time they do it, which is only a couple times a year, it's different. You know, because also it depends on what kind of market conditions you're in. Okay, the more volatile the market conditions are, really, in theory, you do have a chance to grow it even bigger. If there's hardly any volatility, then you're not going to get as big of moves, right? You can't make as much money, in theory, right? There's always good plays, though. So I just wanted to talk about that, just touch on that real quick. All right, anything else? I see there's still 4 of you in here. Anybody has any questions? I'll wait about 30 seconds or so. And if not, then we'll jump off of here for the day and we'll see how we end up. Let's just take a real quick look here. Again, here's where we opened up. We ramped up here, came back down, which we expected. I showed you at the beginning why. Then here was where the news came out on Gilead, sold down, got our support in an area where we expected, came back up, sold down again into the same exact area, caught support, and now we're going higher. So that's where we're at, and we got a little bit over an hour to go in the market day. And so what we're looking for here, just so you know, okay, what we're looking for here, on this move down and now back up, is this just going to be structure, or are we actually reversing and trying to go higher? Okay, because we had this strong move up here. This started at 7 a.m., strong move up. Now we've had a strong move down, okay, over to here. So basically we're right back to where we came from. So is this now the start of a move down? Structure would mean what? A lower low, right? Here's your high, lower low, lower high. So anywhere in here, if it turns and starts heading back down, that is the beginning of a down move, right? Because we have to have what? We have to have at least 3. We'd have to have a lower low, which we have. Lower, actually it's really an equal low. I wouldn't even call this a lower low. But if we get a lower high, then an equal low is about the same thing. But if somewhere in here it starts to go and then we get a lower low, now we have our 3 legs. Our low, lower high, lower low. That tells us we're starting to trend down. Now if this comes all the way back up here, right, then there was no downtrend. It was just this move. It was just this move. So that's what I'll be watching for as the end of the day wraps up. Okay? All right, guys. We'll see you in the room, and good luck. If you're still trading anything, be safe. We're heading into Power Hour. Bye-bye.